Hi, and welcome to Frank Talk on Mortgages. I'm Don Scott, the CEO of Frank Mortgage. Today we're going to talk about debt service ratios. What are they, and why are they so important for your mortgage application? So every time the mortgage application comes in, the mortgage lenders will calculate two debt service ratios related to that application. The first is called the gross debt service ratio, the GDS ratio, and the other is the total debt service ratio, or the TDS ratio. These ratios are essentially a measure of the cost of debt service relative to your gross monthly income. So the GDS ratio formula is related to housing costs. So it's the mortgage payment amount, and every time in these ratios when we talk about a mortgage payment amount, it's the stress-tested mortgage payment amount. It's not your actual mortgage payment amount. So let's say that the mortgage rate's 5%. The rate the lender will use will be 5% plus 2% or 7%, which is the stress test requirement. So the GDS ratio is the mortgage payment plus the property taxes plus an estimate of the heating costs plus half of the condo fees. Add all that up and divide it by the gross monthly income of all the applicants on the mortgage application. The TDS ratio is all of that, but added to it is your other debt service costs. If you have other debts like a student loan, or maybe you have alimony payments to make or those sorts of things, they get added to it. The lenders for prime borrowers want the GDS ratio to be less than 39%. So less than 39% of your gross monthly income will go towards the cost of that house. And they want the total debt service ratio to be less than 44%. So less than 44% of your income will go towards the housing costs plus your other debts. If your ratios are below that, it doesn't mean you're going to be approved for a mortgage, but it really, really helps. If your credit score and your income is stable and it's a good property and your ratios are in line, it's a good sign that you're probably a prime borrower and you're going to get access to really good mortgage rates. If your debt ratios are too high though, they alone can lead to a decline of your mortgage application and lead you to look for other alternatives. So let's go through some examples here to show you how it works, because it's important for you to, ahead of time, kind of understand what your ratios are. You don't want to get halfway through or 3/4 of the way through a mortgage application and then find out that your ratios aren't in line and you're going to be declined for the mortgage. So it's good to do a little homework up front, find out before you get on your mortgage journey where you stand with regards to your ratios. So we have some simple tools on our website that you can use to do just that. So let's look here. You go to frankmortgage.com, go up to the menu bar, and you can see calculators, and click on the calculators. The first thing we'll do though is we'll go to the mortgage payment calculator so that we can get an idea of what kind of mortgage payment might be required for any particular property you may be looking for. So let's just come up with a sample case where you've got a property value, say, of $500,000, and we'll run two scenarios. In the first scenario, you've got a $50,000 down payment. In the second scenario, it's a $100,000 down payment. And the rest of it's the same. So the mortgage rate, again, because it's stress tested, it's 5% plus 2%, 7%. 25-year amortization with a monthly payment frequency and a 5-year term, which are the most standard in the market. And we can see here that we get mortgage payment under the $50,000 down payment scenario of $3,249 and change. Pretty material difference if you can increase your down payment to $100,000. Down payment's very critical to your debt service ratios. The payment drops all the way to $2,801 and change. Quite a big difference. So now let's go back to the website, go back up, click on the calculators, click on GDS TDS Calculator. You see here now our calculator. Now we filled it out in advance with a scenario. And you can see here, we're making an assumption of gross household income for you and your co-borrower of $130,000. And we're using the $50,000 down payment scenario where the mortgage payment was $3,249. We're assuming it's not a condo, so there's no condo fee. If there was a condo fee, you didn't put it here. We don't know the heating cost of the house yet. You haven't bought it, but we make an estimate of about $100 a month for heating. And for property taxes, if you don't know that number, you can probably get it from your realtor. If you are looking at a specific property, they'll know that. It will probably be on the MLS listing. Or if you don't have a property specifically in mind, they can give you examples of the property taxes for the kind of property you're looking for. But if you're really early in the process and you haven't even talked to a realtor, just use an assumption of something like 1% of the property value. And remember from the mortgage payment calculator we were on, we assumed a property value of $500,000. So the property tax assumption for this purpose will be $5,000. We then need to know a little bit about your debts to help us calculate the TDS. So we're assuming you're a pretty good borrower, no excessive debts for this scenario, but $1,000 credit card balance, and let's say there's a $20,000 line of credit balance. The calculator will just take these balances and calculate itself what the monthly payment requirement would be for those balances. For a car lease or loan though, let's assume you've got a $600 monthly payment and you've got no other debts because of course you're a good borrower. Look at the results. Your GDS is 34.76, TDS 46.11 in this scenario. So the GDS ratio is good, it's less than 39%. The TDS though is high, it's above 44%, which is not good. So what can we do? Well, there's a number of ways to deal with high ratios. You can increase your down payment, you can pay down some debts, you can find another co-borrower to increase the income number, or if you can't get the ratios down below the required amounts, you can look for lenders, alternative or B lenders, that will lend to people with higher ratios. But let's run a couple scenarios here so you can see how this calculator can work for you to understand your situation. Let's go back up to the monthly mortgage payment and put in the $2,801 amount here, which is the amount if you had a $100,000 down payment on this $500,000 property instead of $50,000. And you can see that alone right there brings your ratios in line. The GDS already was in line, but it's all the way down to 30.62, but the TDS now is below 44% at 41.98. Very good. You can see the power of the down payment there in getting your ratios in line. Now let's go back up and put the original payment of $3,249 back in there and see if there's other ways to get that TDS ratio in line. Of course there is. You've got other debts. That's why the ratio is too high. So maybe you don't have $50,000 for a bigger down payment, but maybe you've got $10,000, but you can pay down this $20,000 line of credit to $10,000. So let's do that here. Put in $10,000 and look at that. The TDS ratio now is 43.34%. So the ratios can be handled in a few different ways to get them in line, to get them under the 39%, 44% that is required. Now, sometimes you're not able to do that, and if that's the case, the options for you are to possibly look at a smaller property, which would result in a smaller mortgage and a smaller payment, something more affordable for you where your ratios work out. Or, like we mentioned earlier, go to a B lender who can handle the higher ratios and still grant you a mortgage, albeit at a higher mortgage rate. So that's how you can figure out your GDS and TDS ratios. It's pretty simple. If you're comfortable with the calculator like this and the numbers, you can go online and just do it yourself. If that's not for you and you'd rather talk to someone about it, please reach out to us. You can look on the screen here. You can find us online at frankmortgage.com, or you can call us at this 1-888 number, and one of our agents will be happy to walk you through the process, help you understand your debt service ratios and what it means for you to get a mortgage. We're happy to help. Call us anytime. So again, this is Frank Talk on Mortgages. I'm Don Scott, the CEO of Frank Mortgage. I hope you found this helpful, and thank you for watching.